Hello guys, welcome back to our YouTube channel. So guys, today we have another bang guys, whereby we are going to take a look at the statement of financial position, or a balance sheet, So guys, in this bank guys, let's make sure we understand what is balance sheet, and guys, go through the structure or the format of balance sheet. So guys, what is a balance sheet? Is a financial statement that is usually prepared at the end of an accounting period, which is what a financial year, to show the financial position of a business in terms of its assets, liabilities, and equities. So guys, we know that balance sheet is a financial statement in which is prepared at the end of our financial year in order to show us the position of the business in terms of its assets, liabilities, as well as owners' equities. And then guys, under balance sheet we have what you call components. So guys, we have what you call components. So those components, it's an asset, as we want to see the position of the business in terms of its assets, in terms of its liabilities, and also equities. Meaning under balance sheet guys, we have only three components. And then guys, so now let's get to the format of the balance sheet. So guys, this is our balance sheet. The format of our balance sheet: we have assets, we have equities and liabilities, and then we have all those things. So guys, the purpose of this video guys, it was created so that each and every one of us can understand the structure or the format of the balance sheet. So guys, as they told us that balance sheet, it's made of three components. Then we are going to have the first component, which is assets of the business. And then we are also going to have another component, which is equities. It's owners' equities. It's equity. And then we are going to have our third component, which is liabilities. Then we are going to have liabilities guys. So our balance sheet is divided into three components, which is assets equals to owner's equity plus liabilities. So guys, and this is the structure guys, and just keep it simple. So guys, we'll start with the first component, which is our assets. So guys, normally our assets, we have two types of asset. The first asset that we have, it's non-current assets. So we have non-current assets as well as our current assets. Same thing guys, in under owner's equity component, we don't have any type of equity. So guys, we'll pass this equity section and then go to liabilities. Same thing guys, under liabilities guys, we have two types of liabilities. Meaning, as we said, under assets we have current asset, then under liability we'll also have we'll have a non-current liabilities. And then guys, as we said again, under assets we have current asset. Then in this component, which is a liability, we'll also have what you call a current liabilities. And then guys, this is our structure, guys. So whenever you prepare a balance sheet, guys, just know that your balance sheet is divided into three components. We have assets, we have owners equities, and we also have liabilities. And then under assets, we have non-current asset is divided into two categories, which is a non-current asset as well as what current asset. And then under owners equity, we don't have anything yet. And then under liabilities, we have non-current liabilities and also current liabilities. And then guys, so now let's get to our component, which is an asset. So guys, under non-current asset, we are only going to have only two things, which is what we are going to have: a fixed asset and also our fixed deposit. So guys, under non-current asset, we only have two types of asset, which is what a fixed asset and a fixed deposit. And then guys, under our current asset, we are going to have what you call inventory, as well as our trade and other receivables. And then lastly, we are going to have cash and cash equivalent. And then guys, this is our complete session of our assets. And then guys, our non-current asset plus our current asset, they are going to give us our total asset. And then we'll have our total assets at the end. So guys, please go home, or whenever you find some time, guys, just practice your format or the structure of income statement by talking or by focusing on one component. So under assets, we have two types of asset, which is a non-current asset. We also have a current asset. And then under non-current asset, we have two fixed things, which is a fixed asset and also fixed deposit. And then under current asset, we only have three things, which is inventory, trade and other receivables, as well as cash and cash equivalent. And then guys, now we can go to our equity section. Under our equity section, guys, as grade 10 learners, we only have capital. We only have capital account. And then guys, under our liabilities component, we also have two types of liabilities, which is a non-current liability as well as a current liability. So whenever we talk about liabilities, it's we talk about the outflows of money in the business. There might be immediate outflow of money in the business or future outflow of money in the business, such as loan. So loan will be our non-current asset, and it's only going to be loan. And then under current liabilities, we have trade and other payables. As under assets, we have trade and other receivables, because of the money it needs to come in the business. It's an inflow of money. And then under liabilities, it's going to be an outflow of money, whereby we are going to have trade and other payables. And then guys, we might have our bank overdraft, unfavorable bank account, or a negative bank account. And then we will have our short term loan, meaning it's loan that was paid to our creditors. And then guys, and this is our format for income statement. And then guys, I have another strategy whereby you can be able to form it. So under assets guys, we can use what you call FFITC, which is what fast forward our ITC. Fast forward our ITC. And then guys, we can just take this and put it in a straight line method. And then guys, we can come to our assets, and then we have assets. Under assets we have two types of assets, which is a non-current asset and also the current asset. And then under current asset, under non-current asset, we'll have our first F and our second F, which is our fast forward ITC. And then guys, first F will be our fixed asset, and then our second F will be our fixed deposit. And then guys, now we can come to our current asset. And then current asset, we have the first I, which is inventory. Then we are going to have inventories, and then trade and other receivables. And then we have our cash and cash equivalent. And then guys, in this stage guys, we can be able guys to look for our balance for our fixed asset and record it under our non-current asset, and also have the amount for fixed deposit from our trial balance or the given information and record it under our non-current asset. And then guys, we are going to add these two, and then whenever we add these two, we are going to have an amount for non-current asset. And then we are going to have an amount for what? For non-current asset. For non-current asset, meaning these two will be equals to our non-current asset. And then guys, same thing under current asset, we'll have our inventories. Our inventories, they will be recorded here, and then our trade and other receivables will be recorded there. Cash and cash equivalent will be recorded here. And then whenever we add these three, and then we are going to get our current asset. And then guys, our total asset, it will be our non-current assets plus our current assets, and then it's equals to our total assets. And then guys, we are going to add them here guys. So guys, this thing guys, it's a quick explanation of our balance sheet guys. So please guys, practice all the time. Whenever you get a chance guys, just practice using these three components. Start with assets, come with equities, and also liabilities. So guys, now let's go to our equity and liability section. So guys, as I told you guys, under owner's equity or under equities, we only have one account, which is under only one note, which is capital. And then your capital will be made of what? The opening balance of capital plus the net profit minus your drawings. And then we have our capital. We have our capital, and then this amount of capital will be what? Our equity and liability. Will be our equity and liability guys. Will be our equity and liability. And then guys, we have liabilities. Under liabilities, as we said, we only have loan, then it's what? It's loan, and then we are going to write our loan, and then the amount of loan will be recorded here, guys, and then immediately it will be our non-current liabilities. And then, guys, we have current liabilities, whereby we have trade and other payables. We are going to have our trade and other payables, and then we'll record our amount here, and then have our bank overdraft if it's given, guys, and then we are going to record it there. And then also we are going to have our short term loan. It's our repayment of what? Of loan. And then all these three, guys, in will be added so that we have our current liabilities. And then, guys, our total equity and liability, it's made of our total equity and liability, it's made of what? Of owner's equity plus non-current liabilities plus current liabilities. And then, guys, it's equals to our total equity and liabilities. And then, guys, the most important thing, guys, that we need to know, guys, whenever we prepare a balance sheet, guys, is that, as we spoke, guys, that asset is equals to equity plus liabilities, meaning at the end of your preparation or the recordment of your balance sheet, guys, and if ever you have 500 or 5,000 under as your total asset, then at the end your total equity and liabilities must also be how much? Must also be 5,000. And then this thing, we call it a what? A balance sheet. And then everything what? Balances, guys. So, guys, please go home, study this structure, know it by heart, guys, know it by mind, guys, and understand this structure. So, guys, in our upcoming video, guys, we'll get into details whereby we are going to focus on tangible assets, inventories, trade and other receivables, cash and cash equivalent, capital, trade and other payables, guys, and then we'll be able to understand what is a fixed asset and how to complete our fixed asset, guys. How to complete our fixed asset, how to complete our inventories, how to complete our trade and other receivables, and also our cash and cash equivalent as our assets, and be able to complete our equity section, which is a loan, and then be able to complete the trade and other payables as our current liabilities. So, guys, and please go home again. If ever you don't understand, guys, please rewind, pause while you subscribe, guys. Please, guys, rewind while, guys, you like. Please rewind while you press that notification button, guys, so that whenever I upload, you are notified. So, guys, this thing, it's a bang. So, guys, take care of yourself and make sure that you start